Hey everybody, and welcome to the premiere episode of the Matt Prohaska 4-Minute Programmatic Interview, or hashtag TMP4MPI, because if there's one thing the programmatic industry needs and has been clamoring for, it's another long acronym. Joining me today at this debut is Brian, pronounce your last name again?
That would be BWW if you wanted an acronym, but Brian Wieser.
Wieser, very good. And with Pivotal Research, so tell the folks at home what Pivotal Research does.
Sure, Pivotal Research, we service institutional investors. I produce equity research.
So, those investors are big banks? Or stockholders?
They're investment funds, they could be hedge funds, very, very large funds mostly, not individual investors to be clear. But having worked in the industry, obviously I like to publish ideas for the industry, and certainly I've produced a lot of ideas and engaged with the industry to the extent that I can, and so that's certainly a large constituency of my readership.
And so you're not just this guy on the outside pundit who's been studying this and looking at numbers. You were in the weeds prior, right?
Right. I was a banker and then an analyst, and then I went to go work in the industry for about 8 years. I was the guy who forecast global advertising inside of a unit of Interpublic.
Good deal. Interpublic, IPG, Magna, for those programmatic translations.
And I spent almost a year as CMO for an ad tech startup called Silo Media.
That's right. Friends of Dave Morgan and the rest of the crew downtown. Very good. All right, so you've published a couple of things about agency trading desks recently, and there have been some interesting developments there. Give us your perspective on the evolution of that, because certainly, if you take a look at the top 6 holding companies, including IPG, and how they've chosen to set up their trading desks, certainly different business models, I would say, for WPP's solution versus perhaps Omnicom's.
Sure. Well, the agency trading desks, I feel like they're taking on very different paths. The notion of the programmatic platform for Xaxis to the creation of tools that the brands can access, which seems to be the Cadran mode. And then there's whether or not arbitrage is commonly engaged in or not. It seems to be another differentiating factor.
So people, Brian Gleason and everybody there would kill us for saying this, but others have called Xaxis just an ad network 2.0, and maybe that's not a bad thing, even though sometimes that has negative connotations. Are they? And isn't that just the next evolution of what someone sitting in the middle between publishers and advertisers and consumers?
I think it is evolving. I think that it's not an inaccurate characterization, but I think that everyone's going to go down a different path, it seems. That maybe Interpublic and maybe Omnicom may not go down the path of creating a platform which is more like a network, and maybe they'll focus on providing tools for their brands. I think there's a lot of different flavors, and it will evolve with a lot of unpredictability, frankly, in the next 6 months to 6 years.
All right. So, speaking of other so-called ad networks, let's pivot, if you will, or transition into a couple of the other folks that are in public markets today that you've commented on. So, recent news: Rocket Fuel, Criteo, since we're in New York, or Criteo if we're in Europe. Tremor and others have had a bit of a roller coaster. How much of the recent downslide on their stock has been just selling, insider or outsider selling, and just the economics of stock markets? How much of it is pendulum swinging to people starting to figure out their model? How much of it is just managing expectations and just being realistic of this bubble being up here, and maybe they're doing great, kicking butt with solid margins certainly, but maybe just not to the extreme that they first came out of the gate?
Well, we've had a couple of problems. First of all is that you've had the reversal of the so-called momentum trade, that there are investors who are driving into stocks because they had great growth characteristics, and investors are surprisingly